Hey everyone, John Henry from School of Trade. Today we're going to be taking a look at a short trade here on the euro after this massive breakout of this little range here. Now, a couple things to note. First of all, we're obviously bearish, right? That's not really in question. We are very bearish. And given this bearish sentiment that we have, we're looking to continue selling. We've been selling down pretty much all morning, right? We opened up coming into the morning. It got a little bit choppy around, 8, 9 o'clock last night, but ever since then, it's been falling pretty aggressively. Now, this most recent drop lower right there formed a nice little range, and we broke out of it, as if that wasn't obvious given that big bear candle. Now, the problem is that bear candle is massive. It's really, really hard to want to sell way the heck down here, right? The breakout, you already missed it, right? So now we're looking for a breakout and a pullback, right? We don't want to sell low, we want to sell high in a pullback, and that's exactly what we're trying to do here. So we're pulling back into the moving average here. Nice little bear candle closing right on its lows after a doji trap on the highs. This is everything that we're looking for in a sell, so we're in short at 27.80, looking for a continued drive to the downside. Now, the overall objective on this, given the circumstance, we already missed the big breakout, likely because a lot of people are going to be thinking the same thing. I missed the big breakout. I didn't get it. It didn't give me a chance to get in. I'm just going to look back to the lows. And because of that sentiment from pretty much everyone right now, that's what we're looking for. Now, we do also know that there will be buyers off of the lows. There's always buyers at pretty much every low. But this one actually had a decent amount of follow through, right? They tried pulling down. The buyers tried buying back in again. So we know that there are going to be not only stops underneath the most recent low, but also underneath this larger low down here. Now, how can we use that information? Well, we know that if there is going to be a stop underneath the low, there will be buyers under there, but we're looking for a little bit more of a breakdown through the bottom. So instead of taking an exact target right at the lows, we can usually get away with going for a little bit more. Now, in terms of that little bit more, what are we expecting? Well, not much. But it does give us a semblance of saying, well, if the low is at 80, they could drop down to, maybe 5-6 ticks underneath it, around 50 or so. So based on that information, we know that we're looking for a breakdown in this case. Then I want to front run where I anticipate that breakdown being. Now, because I know that the buyers will likely have their stops one tick under the low, very commonplace for stops, I know that 26.75 will likely be the area that they're going to get stopped out. So I want to see them drive a couple ticks underneath that. So I'm going to target 26.65, looking for their stop run to fuel the move right through into where buyers will probably start picking the market back up again. So the risk reward on this trade is phenomenal. That does mean that the probability is lower, but the reward versus the risk kind of counteracts that probability. That being said, this is a gorgeous place to be looking to sell, right? We're in a pullback after a huge breakout. Everything is pointed to the downside. So the short at 27.80, looking for a move down to 26.65 as the final objective at the bottom. Seeing some very nice continued bearish volume here. We're pushing into the lows. Now we need to crack the lows, get their stops. Again, we know that their stops aren't going to be at the lows. It doesn't make any sense. It's usually going to be one tick underneath. I'm using that information to say, well, if they're going to get stopped out, I want them to fuel that move down into my target. But because we've come so close to the objective already, and we are at a double bottom scenario, I want to lock out all of the risk. I don't want this candle coming back at all. So my stop is coming down to 12.755. It is above the current candle that's forming, which means it does have a chance of getting whipped out, but so does everything, right? We want to make sure to reduce the risk when we need to. And right now, after a huge breakdown and we're at a double bottom, we haven't hit the stops yet. There's no reason to be aggressive on this anymore. Now we need to see them either finish the job or take us out. So the stop is down at 12.755, looking for the stop run at the lows and not looking for a whole lot of follow through the bottom, just looking for that stop run to fuel a quick couple extra ticks through the lows before we start seeing the buyers coming in. Now, where are the buyers likely to come in? Well, the last time we broke down very, very aggressively. So a lot of times, if that is a scenario, you only break out maybe an extra 10% underneath that. You usually don't break out very far. So that's kind of what we're looking for. We're not looking for a whole lot on the move, but we do want to see the stops fuel a slightly larger move into our objective. So that double bottom is hitting. Now we need to see the sellers follow it up, get that drive lower. Stop is locking out a bunch of the risk. No more risk on the table, only profit potential, just some less than others, of course. Now we just have to see the sellers push. We're testing the lows. We hit the stops. And notice that quick little bounce there. We know that buyers are taking this move right here, right? The stops triggered. and now they're finding a little bit of support there. Now, there's a couple things you can do here. Seeing that immediate snap support right there does tell you, you know what? Yeah, we were looking for a couple extra ticks. If they can't do it right now, we're going to have to get out. Nope, and they could do it right now. Perfect. That's what we were looking for. So that immediate stop hit bounced right back up, and that shows us that buyers are still continuing to buy into this. Look at this wick on the bottom now. Beautiful move down, gorgeous breakout. Again, the problem was the breakout was just too big. We can't jump in on that move anymore. The move is done. We would be selling at the lows if we did. So we have to wait for a retrace. We get the retrace into the moving average, gorgeous drive lower, and that wraps it up for us. So if you have any questions about it, feel free to send an email to School of Trade. Don't forget to check out our trial at schooloftrade.com, and as always, we'll catch you next time.